Welcome to The Explainer. If you've ever felt like the stock market is basically just a giant casino where the house always wins, you are not alone. But what if I told you that the most successful investors on the planet, they aren't gambling at all? Today, we're going to break down their core strategy. It's called fundamental analysis, and show you exactly how you can use that same powerful mindset.
So, let's just start with a number that should really make you stop and think. 90%. Yep, according to our sources, that's the staggering percentage of individual investors who actually end up losing money. It's a tough pill to swallow for sure, but understanding why that happens is your first step to not becoming a statistic.
So why? Why is that number so incredibly high? Well, there's this common idea that the market's just rigged, right? But the real reason, it actually has a lot more to do with our own psychology and how we approach it than it does with plain old bad luck.
And here it is, the absolute core of the problem. Most people treat the stock market like a trip to Vegas. They're chasing hot tips, they're getting caught up in the latest social media hype, they're betting on squiggly lines on a chart. They're basically doing everything except the one thing that matters, the actual homework.
I mean, think about it like this. It's a brilliant analogy. Would you ever buy a local restaurant without looking at its books, or tasting the food, or at least checking out the neighborhood? No way. It sounds crazy, right? So why on earth would you treat buying a piece of a massive company any differently?
So what's the antidote to this whole gambling mindset? Well, it's not some kind of secret formula or a get-rich-quick scheme. It's a systematic approach, one that the best in the business have used for decades. It's called fundamental analysis.
At its heart, what we're talking about is a complete shift in your thinking. You have to stop betting on a ticker symbol that goes up and down. Instead, you start thinking like you're a partial owner of a real business. A business with buildings and employees and a real shot at a future.
And when you put the two approaches side by side, wow, it is just night and day. On one side, you've got this detective's mindset, right? Research, data, focusing on long-term value. And on the other side, it's all emotion, hope, fear, and just the thrill of a quick bet. This is the choice every single person has to make.
Okay, but before we can start building on this new foundation, we've got to clear away some of the rubble. See, there are these really powerful myths that keep even super smart people stuck in that gambling mode. So let's just bust them one by one.
We've all heard this one, right? And honestly, it might be the most dangerous myth of them all. Because if you believe this, it gives you the perfect excuse to not even try to understand what's really going on.
But here's the reality. Analysis, that's the thing that separates real investing from pure chance. When you actually take the time to study a company's finances, its strategy, its competition, you're not guessing anymore. You're making an informed judgment.
Okay, this next myth is a super tempting one. It's this idea that you can get some kind of edge by just reacting faster than everyone else to today's breaking news.
But listen, here's the hard truth about trading the news: you're already late to the party. By the time a headline hits your phone, thousands of super fast computers have already traded on it. The move is already baked into the price. That's why smart investors, they look at the 5-year trend, not the 5-minute news flash.
Ah, the classic advice. It sounds so simple, doesn't it? Just time the market perfectly. But this is the siren song that's lured countless investors onto the rocks. The simple truth is, nobody, and I mean nobody, not even the top experts in the world, can consistently call the tops and bottoms of the market. So instead of wasting all your energy trying to do the impossible, focus on something you can do. Find great businesses and buy them when the price is fair. It's a much better and way less stressful way to build wealth.
Now this myth, it kind of swings the pendulum the other way. It's this idea that stocks are the only way to build wealth, and that everything else is just a waste of time.
But in the real world, stocks are just one tool in a much bigger toolbox. A truly smart portfolio is diversified, and depending on your specific goals, your timeline, how much risk you're okay with, things like real estate or bonds or even gold could play a really important role in your financial plan.
And finally, we get to the most intimidating myth of them all. It's this belief that to have any chance of success, you've got to be some Wall Street whiz with a fancy MBA. But that is absolutely not true. In fact, some legendary investors, like Peter Lynch, they've argued that regular people can actually have an advantage. Why? Well, because you're not bogged down in complex jargon and you can just focus on common sense. The only real requirements are curiosity, patience, and a willingness to think things through step by step.
So, with those myths totally busted, we can finally get to the good part. How do we actually do this stuff? The great news is, it's not some secret, complicated formula. It's a simple, but really powerful three-step framework.
The whole process follows this simple top-down approach. You start really wide, and then you narrow your focus. So first, you look at the whole economy. Is the overall environment healthy? Think big picture, like interest rates or jobs. Then you zoom into the industry. Which sectors have a tailwind, from new tech or changes in how we live? And only after that do you zoom in on the final step, picking a specific company. That's when you do the real detective work on its numbers, its leaders, and what makes it special.
And doing it in this order is absolutely crucial. You've heard the saying, a rising tide lifts all boats, right? Well, you want to make sure the tide is actually coming in before you start worrying about which boat is the strongest. A pretty average company in a booming industry will almost always do better than a fantastic company in a dying one. You've got to get the industry right first.
So after all this work, what's the real payoff? Why go through all this trouble? Well, let me tell you, it's about so much more than just making more money.
This right here, this is the real payoff. This method doesn't just tip the odds in your favor. It totally changes your entire experience as an investor. You cut down your risk because you actually understand what you own. You start seeing opportunities that other people just miss. But you know what? Maybe the biggest advantage of all is just peace of mind. When the market goes crazy, and it will, your confidence isn't in some flickering price on a screen. It's in the business you own. This whole framework, it transforms investing from a super stressful game of chance into this fascinating process of discovery. It puts you back in the driver's seat. So, looking around at the world, what's the first business you're going to choose to really, truly understand from the inside out?